The banking crisis has spilled over into Europe in full force, and although regulators again promise to give money and solve all problems, we are hearing more and more warnings about the beginning of a new Great Depression of the global financial crisis, which lasted a full 10 years. Let's get to the bottom of this. Credit Suisse has got us worried. After the news that the main shareholder, the National Bank of Saudi Arabia, would not give them any more money, the shares began to fall, only on the market minus more than 21%. And with the opening of trading, this trend spread to other European banks, which fell by about 5–10%. Interestingly, the U.S. stock market was also not left out, and at the moment the S&P 500 index was showing a drop of 2%, and Bitcoin almost fell below $24,000. Bitcoin was bought back from the critical level. Also, investors almost halved the fall on the S&P 500, all because a new money bag came to the market in the person of the National Bank of Switzerland. The regulator interfered in the situation by promising to give money, and today we know that its help will make $54 billion. Let's have a little interaction. Think about it and answer the question. You can even write about it in the comments. Will you buy shares in a bank that has been denied aid by its major shareholder, which has admitted problems in managing its finances, which has been forced to ask for money from the country's central bank to avoid declaring bankruptcy, and its shares have been showing minus 90% all along? Now that you've collated all these facts, let's look at what's going on with Credit Suisse stock today. They're up 20%. And you know what? This is my personal opinion. But until all these optimists are stripped to their underpants, we are unlikely to see a normal bull market. What could possibly go wrong if they were kind of promised money, as much as $54 billion? Except where is the Swiss National Bank going to get that money from? If last year they reported the biggest loss in their history, $143 billion. Such deficits were formed due to the fact that the Swiss National Bank keeps most of its assets in the U.S. stocks, which in the 2022 year were on the bear market. And now the regulator has an interesting dilemma. Either to print 50 billion Swiss francs, which will lead to a depreciation of the national currency, or the second option, to sell $54 billion worth of American stocks, of which they still have plenty in their portfolio. I think I don't need to explain. What will happen if such large player will start to sell their stocks? Everybody will be hurt, and even the cryptocurrencies will suffer because of panic. And you know what? If you remember the history of Great Depression, which lasted from 1929 to 1939, then we had a very similar picture at the stock market when yesterday everybody was dumping stocks in panic, and the next day they were turning greedy to the max and buying everything they saw. But the crisis has to have a reason. Let's think about what that reason might be, and whether it is connected with the nearest events. I highly recommend being subscribed to Telegram. The link below the video. We have quite a few warnings that all the events going on with the banks are just the beginning. Traditionally, Robert Toru Kiyosaki could not avoid this topic. Here is his latest warning. He thinks that after the collapse of the banks, we will have bigger problems, like a collapse of the pension funds, which also keep money in stocks and bonds, and in that way, like the banks at the moment, might find themselves with big paper losses. The good thing is that they are not banks, and are not threatened by disgruntled savers. And as a way out of the situation, Kiyosaki recommends to buy gold, silver, and Bitcoin. Here's what I'm hearing billionaire Ray Dalio say is bankruptcy, a canary in a coal mine. This is an early dynamic that will have a domino effect in the venture capital world and far beyond. Who do not know about the canary? There used to be no gas analyzers, and the miners went underground with a bird in a cage, which is very sensitive to air gases. And if the bird began to choke, it means you must urgently leave the dangerous place. The bird is very sorry. According to Ray Dalio, the current collapse of the banks was the first bell, which heralds a long-term crisis in the debt and credit markets. And the system will recover only after a full reset, that is, a full-blown crisis. And the blame for these events puts the blame on the Fed and the central bank and other regulators who have raised rates to fight inflation. It's worth adding here that central banks had no other choice, otherwise inflation would have continued to pick up. But you have to pay for everything. So inflation arose as a result of the unbridled printing of money to defeat the crown crisis. And now we have a crisis as a response to the tightening of monetary policy to combat rising prices. Who expects a big crisis? Elon Musk. Here is his tweet where he says that the current situation is really close to 1,929. JP Morgan estimates that in order to prevent a further collapse of the banking system, the Fed will have to provide it with $2 trillion of liquidity. Let me remind you that so far they plan to address the issue with a specific bank of about $25 billion. But that's not going to be enough for sure. And if the situation worsens and a full-fledged raid on the banks comes into play, with depositors withdrawing funds en masse, to prevent this from happening, the banks will cut back on lending, trying to keep as much money on their balance sheets as possible, which will slow down the economy considerably and finally give the Fed that long-awaited victory over inflation. I also want to say about the $2 trillion that may have to be taken out of the Fed's reserve. I've seen these actions already tried to be called a bull market launch. That's how the printing press will be turned on. But there is a nuance. At the next Fed meeting, the markets are predicting a 25-point rate hike with a 60% probability. And it seems that investors are even trying to lay hold on the chance that before the end of the 23rd year, the Fed will change its anger on mercy and will start to lower the rate. But there's a rule. Don't look at what they say, but what they do. And here comes the news that the European Central Bank raised the rate by 50 points, which means that the European regulator has not changed its mind, even despite the impending sell-off in the banking sector. And the Fed may not change its mind either and continue to push the rate up, because as we discussed in the last video on the banking crisis, it is not the banks that will be saved, but only the depositors' money. So there could be bank crashes. Already there is information that another American bank, First Republic, is looking for those to whom they could sell their assets. In the current situation, the key day is March 22nd, when the Fed should make a decision on the rate. That is when we will find out if they plan to slow down a little bit to protect the banks and the stock market from collapse, or if they will continue to bend their line, relying only on inflation. Support the channel with likes if the video worked for you, and subscribe if this is your first time here. Thanks for watching. Your cryptocurrency.